Welcome, everyone, to the third episode of Sullivan & Cromwell's Trading and Markets podcast. I am Ryan Miller, your humble host, and I am a partner in Sullivan & Cromwell's New York office, where I am the co-head of our commodities, futures, and derivatives practice. Thank you to everyone that tuned in to our last episode, a 10-minute Q&A session with Sullivan & Cromwell's Steve Pekin, who, having recently served as the SEC's Director of Enforcement, shared some of his perspective on the SEC enforcement process and their potential priorities for the coming year. That chat and all of our prior episodes are available for free, streaming on the Sullivan & Cromwell website. Just do a Google search for Sullivan & Cromwell Trading and Markets podcast, and it should come up. It's usually the first hit. So let's jump into today's discussion. The goal today is to give some thought to what regulatory transition means or looks like for the digital asset and cryptocurrency space. And I'm saying space here in air quotes because I readily concede that space, again in air quotes, is not really a useful term to describe any industry or area of the law. But given the breadth and scope of the crypto world and the mix of regulators following these developments, I really do think space is probably still the right word for crypto and digital assets. To assist with the exploration of the crypto space, I am more than excited to welcome to the podcast my good friend and one of my favorite lawyers, Christine Parker. Christine is a partner at the law firm of Reed Smith, where she leads a regulatory, enforcement, and transactional practice covering commodities, derivatives, and cryptocurrencies, amongst all sorts of other things. Before entering private practice, Christine was legislative counsel to the Honorable U.S. Senator from New York, Chuck Schumer. With Senator Schumer, Christine focused on defense, energy, and foreign policy issues. Christine, welcome to the Trading and Markets podcast.
Thank you, Ryan. I am super excited and thrilled to be here with you today. I think this conversation is going to be a lot of fun. Like you said, I do focus most of my practice on commodity and derivatives regulatory trading matters. And obviously, over the past few years, there's been an explosion in work related to digital assets, cryptocurrencies, blockchain, you name it. So, that work spans across regulatory, transactional, and enforcement matters. So I'm happy to be here and talk about these matters from any approach you want to take them.
Awesome. Thanks. Again, super excited that we can do this. So as I talked about in the intro, one specific area I want to think through is this idea of regulatory transition. There's obviously a new White House, there's a new administration, and I guess for us, the trading and markets world, let's look at it from the perspective of the SEC, the CFTC, and maybe you have some insight on the bank regulators as well. Who are the leaders that President Biden is choosing to lead those agencies, and what might that mean for digital asset regulation? Obviously, at the SEC, President Biden has nominated Gary Gensler to be the chairman. Gensler is my former boss when I was at the CFTC, and he was the chairman. And I know you worked opposite Gary when he was at the CFTC chair role for many clients.
Sorry, just to interrupt you, I'd like to say that I worked with Chairman Gensler in his role.
Exactly. As an advocate and everything else, always working with the regulators.
That's exactly right.
Wonderful clarification, and certainly welcome. But I want to ask you first, when you look at the SEC and their digital asset priorities, what does it look like under a Chairman Gensler?
That's a great question. It was pretty exciting to see him named the chairman of the SEC. We're familiar with his work at the CFTC, but he is somebody that I think of as being very crypto forward and interested in the space and excited to engage in the space and has engaged in the space. So I think what we're going to see is a combination of his interest in crypto and digital assets and the blockchain, combined with his strong, I'm going to say, love of a rigorous regulatory regime for the regulated market, the regulated marketplace, and the regulation of intermediaries and market participants. So I think we're going
exactly. He brings an enthusiastic, priorities-focused mantra to the role, no doubt.
That's exactly right. And I actually think that will be net positive for this space, for somebody who, from a regulatory perspective, is looking to enact a crypto forward agenda. I think for the SEC in particular, that will be really welcomed by market participants. I think, one of the initial areas of focus is obviously going to be broker dealers and their ability to custody crypto. I think that's an area where a lot of market participants have engaged with the SEC. And my guess is incoming Chairman Gensler has a view as to what that should look like and will look like, and is going to move forward pretty aggressively with that. And I think for market participants that are capable, competent, and have the capital, that's going to be really welcome for them. Sort of, okay, here are the rules of the road if you want to do this. And that sort of ties into what the OCC was doing in the custody space, and we can get back to that. But I think the broker-dealer space is going to be one where he's really going to lean in and provide some guidance.
Yeah, I think that's an interesting point. I mean, we keep waiting for, the institutional on-ramp either to cryptocurrencies or to digital assets that are digital securities even. The question is always, where do we get this clear institutional on-ramp? And I think, presumptive Chairman Gensler has always been a rules of the road regulator. And there's no question that will be a guidepost for how he approaches this as well. So I think that's a good point.
I think that's exactly right. And I think he will take that same approach with the ETF, just to sort of tie back to your point about, what will bring the institutional investors into this market. A sort of a pure crypto, whether it be Bitcoin or ETF, is certainly something that institutional investors are sort of ready and excited about. We just need the approval from the SEC to move forward in that space.
So, Christine, just to jump in real quick, on the off chance my mother listens to this podcast, which is very unlikely, can you help our listeners understand what you mean by ETF?
Absolutely. And I certainly do hope that your mom is listening to this and to all of your podcasts, Ryan. So it's an exchange-traded fund. So it's essentially like a basket. It's usually securities that's traded on an exchange just like a stock. And so what we're talking about here is an ETF that would be based on Bitcoin, that would derive its prices from a variety of different sources, maybe from some of the spot exchanges, some of the regulated futures exchanges, but it's basically a basket that an investor can buy and sell just like a security. So it creates liquidity in these underlying products that might not be readily available for a retail investor. It's bringing retail customers into this space through a regulated institutional intermediary.
And when I look across the market, I hear of the Grayscale ETF, which is out there, has been tremendously successful and popular. That's an over-the-counter instrument, technically, as opposed to a pure exchange-listed product. There's some competing products in Canada and the EU. And then you've got public companies adding digital assets into their treasury reserves and changing some of their cash into Bitcoin. And so I think it's a trend that obviously, certainly the past month or two, has seen growing. We'll see if the interest stays there. My prediction is probably, but who knows? To take another angle at the SEC, there's obviously some active litigation, some past litigations. What role is the chairman going to have in where the SEC goes with litigation priorities, particularly in digital assets?
That's a great question. Again, I think having someone like Chairman Gensler, who is very regulation forward, will be helpful in the sense that market participants won't just be guided by enforcement on the security side. So, that in of itself is a net positive. I think there's obviously precedent out there. There's very sort of material precedent within the Southern District of New York based on past litigation brought by the SEC. I think the challenge there is balancing the sort of the customer protection regime and the customer protection framework of the federal securities laws and promoting responsible innovation. And so I think the challenge, my hope is that, the enforcement division is sort of looking at that challenge and thinking, okay, from a customer protection standpoint, what's the additive benefit of any action here? Are we actually protecting customers, or are we creating legal uncertainty in a space that for a relatively novel asset class seems relatively resolved? So that's one of the challenges that I would hope that presumptive Chairman Gensler is active in and sort of thinking from a public policy perspective. Is litigation really achieving the objectives of the federal securities regulation? Or is it better done through a proactive regulatory regime? And sort of what's the net impact of any enforcement action on retail customers? And do these actions sort of protect their interest and in a way that would outweigh any legal uncertainty about the resolution of these actions?
That's an exceptionally clear explanation of the tension that I think any regulator brings when it considers enforcement in this innovative area. So hopefully all our future regulators are out there listening to the podcast. I thought that was very well stated. Let's think some about the CFTC. As of this recording, We do not have a formal CFTC chair nominated. There's plenty of media speculation. There's articles that have talked about Georgetown professor Chris Brummer. I think certainly he's one of the top candidates, if not the clear top candidate. But for your perspective, Christine, former legal counsel to a senior senator, what do you think the White House's timing is on this? And what could be the holdup and or what's the timing to getting the nominee when it occurs through a confirmation hearing?
Great questions. I think what we're seeing is, the Biden administration sort of on day one had an agenda and moved forward very intentionally with that agenda and their nominees, which I have to say a lot of them were incredibly diverse, which was very exciting to see. But, they just have a ton on their plate. The transition wasn't smooth from the previous administration, so there's a lot of cleanup there. The Senate is obviously occupied with pandemic relief, the impeachment, and so they're moving forward nominees. Now there's a power sharing agreement in place between the Democrats and the Republicans. So there's a process moving forward. I think we're just seeing the effects of not limited bandwidth, but the bandwidth has all been taken up, moving other nominees' cabinet positions through. The CFTC usually falls down a little bit further in the list of priorities. The Biden administration names former commissioner, now acting chairman, Russ Benham, as in the interim period. So we'll see what happens as the Senate continues to move the Biden administration nominees and the power sharing agreement between the Democrats and Republicans gets solidified. My guess is after they move Chairman Gensler's nomination, they'll have the bandwidth to pivot to the CFTC, right? They've gotten the SEC done. They know they've got to do the CFTC. They've also got to do the OCC, pretty pivotal in this space. So I think it's just a function of moving the announced nominees through and getting a little more bandwidth to focus on the nominees that haven't been solidified yet.
That makes sense. And it really helped hear the process explained. So once someone gets the job, let's say they have their hearing, what are they going to be thinking about? So this is a CFTC chair nominee in terms of digital assets. Will it be a priority? And if it is, I mean, to me, I think they're going to look at how they do surveillance. I think they're going to look at new types of products, even new exchange models. But how are you thinking that the new CFTC chair is going to prioritize digital assets as one of their issues?
That is a great question. And I think what we're going to see is a pivot somewhat towards the SEC's retail customer protection regime. And that will be very new to the CFTC because in the digital asset space, as we mentioned, it's really primarily a retail market. The institutional players haven't really shown up in full force yet. That's kind of new for the CFTC. They are traditionally a market that's focused on institutional firms that are hedging their sort of commercial risk, their physical commodity risk. They're not really used to retail customers who are going onto Reddit, posting in chat boards and reading in chat boards, and then turning and trading in their markets in a way that was novel for futures markets and certainly novel for the CFTC. So I do think their number one priority is focusing on the retail customers.
I think you're right. I mean, when you look at where the activity is, it's still heavily focused, volume-based on retail activity, and there's so much interest from that part of the market to get exposure to some of these prices. I think you've got a lot of projects, venues, trading venues in front of the CFTC now trying to move forward towards registrations. And you're seeing the staff, in my experience, they're receptive to those conversations. The CFTC staff wants to learn about what market participants and new projects would like to offer. But I think the staff does get pulled back into what are our core focus before we're going to approve something. And they want to say, is this contract going to serve a price discovery function? Does it provide some risk management for somebody out there? Could it be a hedging tool? And then at the same time, what's the surveillance going to look like? How do we make sure there's not going to be market disruptions, manipulation, and other types of misconduct? And so my sense is the staff is right where you are. They're going to look for ways possibly to be leading the new chairman towards this pivot, protecting their core regulatory priorities as well.
I think that's entirely correct. And it's a struggle. We're dealing with the Commodity Exchange Act of 1936 that has some updates, but this space is the technology, the products, everything is evolving so rapidly that I do think the staff is receptive and open, and they like seeing new market participants. They like seeing new technology, new products, new platforms. But I do think there is still this tension between welcoming these new developments, but figuring out and determining how and if they are consistent with the core principles embedded in the Commodity Exchange Act and the CFTC regulations. And I think that is a real challenge because you're seeing market participants offer products without regulated intermediaries. And so it's who's the DCO, who's the FCM, how does this work? There's no regulated intermediary, and it just kind of looks like a trading platform. How do we pull all of this together in a way that's consistent with the Commodity Exchange Act and CFTC regulations? I think that is the challenge for the commission, for the chairman, and the new directors that he appoints.
Definitely. I think it's a great point, and it sort of leads into my last question. Looking forward, trading and markets lawyers like us, as we look forward for day in, day out, SEC and CFTC trading lawyers, are we still going to be talking about digital assets and cryptocurrencies in 5 years? This idea of disintermediation and where are the brokers? Is this space here to stay, or what's next?
No, I think it's definitely not going away. And I think that is the appeal of the blockchain and decentralizing finance, decentralized technology. That for some people that's their native language, and that's not going away. They're just going to keep thinking of innovative ways to apply that to traditional markets. So whether that's lending, if that's insurance, if that's offering derivatives, I think that's the tip of the iceberg, what we're seeing here in the trading market space. And it's going to expand to lots of different applications beyond the financial markets. But I certainly think we're going to continue to see this in the space. And I think the pace of evolution of these products and what's going to be offered will just continue to increase. So I think that's where the challenge is how does regulation capture that? How does any legislative changes from Congress capture that? And I think, it's really just incumbent on the regulators to have sort of a flexible framework and a flexible approach to make sure that they are supporting this new innovation in a way that's protective of the customers that are seeking to be active in this space.
Yeah, no shortage of critical thinking that still needs to be done. And I think you identified all the key points. More access for retail, more types of products, more innovative types of products, while maintaining your customer protection rules, while maintaining your market conduct type protections that are most important to the regulators. Christine, this was fantastic. I really appreciate you making the time. Again, everyone, thanks for joining the podcast. I'm sure we'll do another one soon. My guest today, Christine Parker, a partner at Reed Smith. Thank you very much for joining us. From Sullivan & Cromwell, I'm your host, Ryan Miller. Thank you to everyone for listening to the Sullivan & Cromwell Trading and Markets podcast. We will look forward to the next one.